Good morning, everybody, and welcome to Beat the Bell, presented by Kane Capital. We are ready to get underway talking CPI. We have FOMC minutes later this afternoon. The S&P futures up 40 to start the morning. How we feeling, bulls? How we feeling, bears? Very interesting. We'll talk about the print in just a few minutes. But let's bring on the panel, starting with Diamond Trades. Diamond, good morning.
What is going on, guys? Like Alejandro said, pretty interesting CPI print. We're going to dive into it here in a little bit.
All right, Ramsey Rippers. Good morning.
Good morning, brother. Recession, right? Let's see. I'm excited to see Diamond cover the CPI.
Recession, my ass. Macro, my ass. Any other ones? Yields, my ass. All right. Mo Mamba.
Good morning, brother. Good morning. Yeah, I'm actually excited to hear from Diamond about the CPI print. Probably as expected. Everyone thought we'd pop on this CPI. Yeah, let's look forward to today, see this price action, where we go from here.
Yeah, I think the interesting thing here is going to see if it holds up. I mean, we've seen on CPI, on FOMC, the initial reaction isn't always the true reaction. So we're still very early stages here. We're going to have to continue watching. And last but not least, Stock Sniper.
Good morning.
Good morning, brother. All right, let's get things rolling. Fed forecast, economic calendar. Diamond Trades is flying solo today. He's going to do his best job of letting us know what is going on.
Yeah, we can start with the economic calendar really quick and just get that out of the way. Obviously, I had CPI this morning and core CPI. The FOMC minutes release is going to come in this afternoon, which should definitely induce some volatility into the market. So if you're trading around that time, just a heads up. Tomorrow we have PPI before the open, as well as initial jobless claims into retail sales on Friday, a Fed speaker before the open, and then that Michigan consumer sentiment number. That's going to be a preliminary read before the final read comes out in about 2 weeks. So that's what we've got on the slate for the rest of the week. Pretty high impact news week here to end it up after a pretty quiet start. But let's get back to CPI. So CPI print just came in at 8:30. About 8 minutes ago, we had the CPI number coming at 5% versus 5.2 expected. So that's a year-over-year number. Expectations were at 5.2. We got a 5% print. That's versus 6% last time. So definitely a pretty significant drop in that headline inflation year over year. We also got core inflation coming at about 5.6%. That's literally right in line where we had expectations. The last core CPI number came in about 5.5%. So a little bit higher on that end. And then headline month over month came in at 0.1%. versus 0.2% consensus, 0.4% previous. That month over month number is one that we've been talking about for a while, where you're going to see the year over year numbers come down. And we understand that, based off of the high comparables that you had, right, compared to last year. Last year, inflation was super high, almost a record year for inflation. When you're comparing this year to last year, obviously this year's not going to look quite as bad when you're comparing it to a record year last year. So we were talking about how that month over month number would be really important to just watch in terms of how the trend is really going. And to see that number come in at 0.1, that's definitely good news. The market obviously like that. The S&P futures initially up, I want to say like 30 points, pulling back a little bit here, but still heavily extended from yesterday's close. And it looks like we just hit basically a new high on the ES for this broke over like those March highs, right? So we're back up in that 4170, 4200 level, closing in on those February highs, which a lot of people said would be year-to-date highs. So we're gonna have to see how that plays out for ES if they want to take out those most recent highs that they just set in February in Q1, which seemed like they were so far away. They're only I guess call it 70 points away now. So that'll be interesting. The most important part of the inflation story remains to be the services side of the economy. So Ryan, if you want to pull up that chart, the services side of the economy has remained fairly sticky with a 7.3% year-over-year increase. And so that's why people in particular are looking at the services side of the economy. A lot of those goods prices have actually come down pretty substantially as supplies come back online a bit more than expected following COVID. But the services side of the economy, particularly housing, has remained very sticky. If we go over to the housing chart, Ryan, that's actually equally as elevated. You can see that the housing inflation has actually outpriced core CPI for well over a year now. That housing inflation has just been on a steady uptrend, and that has actually is expected to come down towards the second half of this year, as housing tends to lag the general CPI by about a year. And so, as you can see, the core CPI started to tail off and trend down around last June. If housing is supposed to be a 12-month lag, we can expect to see those shelter prices start to come down, and that should help put some downward pressure on inflation. The last thing I want to talk about here before I just open it up to the rest of you guys and get your opinions on the CPI. We had the 12-month change in services is still elevated. So I want to what I'll do, Ryan, is I'll share my screen because I don't think I haven't sent you this one yet. But more or less, the transportation services and the shelter are both two areas on the CPI where we still see pretty elevated reads, even though we got a lower than expected headline number. So for shelter is still up there around that 8% level on a 12% basis, not seasonally adjusted, and transportation services are up around 13.5%, right? Remember, CPI came in about 5%. So both of those two core categories, shelter and transportation services, are leading the CPI by quite a bit. Medical care services came in significantly lower than CPI. But those are just some of the two areas where we're continuing to see that sort of sticky residual inflation problem. And we'll see if Powell has anything to say on that the next time he comes out. But I mean, overall, it looks like it was good news, right? Headline came in lower than expected. Core came in basically at expectations. And then that month-over-month number came in lighter than expected. So, guys, what are you guys thinking about the CPI today and the market reaction so far? We're up pretty aggressively here in ES so far.
Yeah, I mean, so we're pulling back a little bit, still 32 points. As you hit on, I mean, came in cool number. This is now 7 of the last 9 CPI prints who've seen a positive initial reaction. Okay, there's a clear trend here, and you know, my question is going to be how is this going to now get spun negatively? Because that's exactly what's going to happen. And the market has been slowly climbing higher. The Fed, in my opinion, is seeing exactly what they need to see with inflation coming down. These CPI prints coming in below expectations, and the market continues to react positively. Now we're going to have to watch the Fed in the coming months. I think that this summer is going to be extremely crucial. We obviously understand that the Fed is data dependent, and I think that they're now in a position where they're going to be able to pause and potentially cut rates by the end of the year. And if that's the case, I think that's bullish for equities. I mean, rates come down, stocks go up, and vice versa. That's what we saw last year, and that's my mindset as of now. But again, we're going to have to continue to watch what the Fed has in store for us. But this is good.
I'll give you my hot intake on CPI. I don't give a fuck what CPI is, man. You guys know me. I play price action, man. I can care less what comes out on these numbers. We look at the charts. Where are we at? Are we hitting resistance? Are we hitting demand? Are we hitting supply? Let's just trade off there, huh? I mean, it's news, temporary. You know, all these data that's coming out is temporary. Price action is permanent. Price action will tell you direction. So we won't get into the analysis just yet. At the end of the show, I'm going to hit on the S&P.
Yeah, I guess, I mean, really all that I have to say is that it holds a lot of relevance as the Fed wants to figure out if another rate hike and, you know, how much they're going to hike the rates to bring that inflation back down to 2% target rate, right? Last meeting, especially with following the collapse of Silicon Valley and then what was the Signature Bank, they had a pretty cautious stance. What did they hike rates, 25 basis points again. So it'll be interesting to see if this news changes anything with regards to how they're going to take the approach in tackling this inflation, unemployment, et cetera, bringing inflation back down to 2%. So, I don't think much has changed. I feel like it's been going in a relatively good direction as far as inflation and CPI.
Ramsey, really quick on that, on your point about the Fed and the rate hike. So before the meeting, the probability of a 25 basis point hike at the next meeting was 73%, and it's been dropped to about 60%. So more or less, like you said, like basically unchanged. The market still thinks that they're going to hike 25 bips next meeting, even with that light CPI print. We'll have to see if that changes. Obviously, that's the immediate reaction, but I mean, pretty more or less unchanged. I mean, it's kind of the same.
Right. Yeah. And I think that if I'm not mistaken, this data that came out like month over month, it was the smallest percent gain, like positive for inflation since like March of 2021 or something like that, which sounds like, not that good of a thing. But when you think about it, that's pretty good news. I mean, inflation was what, as high as it was to be, only coming down, and that CPI rate progressing at a smaller rate, shows kind of a good news as far as, month over month. So, it looks like it's unchanged in that FOMC is, I mean, as you said, what, 13% change, 16% change since the data came out.
73% drop. Yeah, 73 down to 60. Yeah. And I mean, that month over month rate of change, you definitely want to see that start to slow down, which is exactly what we're seeing here. So I mean, initial reactions positive. We'll have to see how the market digests this news as the day goes on. Again, we still have FOMC minutes release coming at 2:00. So keep your head on the swivel for that. But that will wrap it up for Fed forecasts. Pass it back to Alejandro.
All right. Let's talk about the system. Let's take a look at some charts. As Mo mentioned, that's really all that matters as traders. The CPI, the FOMC minutes this afternoon, it brings a lot of noise. You have to have a game plan. You have to understand what's going on the chart. And what we have understood is that ever since March 28th at the close, when the system gave the buy signal with the bullish cross of the 10 SMA over the 50 SMA, and we broke over the 50 SMA on the hourly chart, the market has managed to rally now 190 points or so. So a 200 almost point rally from that point. And even on the pullback, when things got slow and we had a couple red days, the 50 SMA on the 1 hour chart held as support, and the market on a higher time frame is in a clear as can be uptrend. And that has been all you need to know. How can we now anticipate if the market, when the market is going to sell off? Well, the vice versa is true. The opposite is true. The 50 SMA, which has served as support, that is the massive level to watch. So if the market decides to sell off today, if it decides to sell off in the coming days, that's what I'll be watching. The level that has served as support, if we can break down below this 50 SMA on the 1 hour chart, if we can break down below the 50 SMA on the 30-minute chart, that is going to be bearish for the market. So that's something that I will keep my eyes on. Again, very important to note that CPI days, FOMC days, we have both today, FOMC minutes at 2 p.m. Eastern. There's a lot of traps throughout the day. So we might get a certain picture painted today, but oftentimes in the coming days, there's even more volatility. We see large price swings. We see reversals. So it's important not to trade based off of the data. That's a losing game. And you really don't want to try to be a fortune teller here and predict what's going to happen next. You want to react based on where price is heading and based on the chart. So the 50 SMA on the 1 hour, very important to watch. As long as we're trading above that, bulls remain in control, which has been the same story now for 3 weeks. So we'll see what happens today. It's going to be an important one. That's going to do it for the system. I'll pass it over to Ramsey Rippers now for Bet the Bell. Do it for the system. I'm going to pass it over now to Ramsey Rippers for Bet the Bell. Good morning.
Good morning, guys.
All right. After a crazy Monday from the pre-market to where we closed, what a reversal. Let's check the stats. practically unchanged. I believe every single one of us, one of you, the guys, chose red. We ended up flipping green in the last like 10, 15 minutes.
Yeah, that was a crazy one.
Yeah, crazy reversal. And it's looking pretty good for the market as of right now. That CPI print, we're trading, I mean, I wouldn't say flat. We're not even up 1%, just a little bit over 0.5%, pulling back off of the initial rip to 413.75, almost 414, not trading 412 and a half. We've seen, on CPI days, massive reversals with respect to fading the pre-market. Remember in the October, I believe it was the August print, October 12th, massive dump. We ended up ripping like 100 something points intraday, closing green. So what do you guys got today? Green or red? Today's a little bit different. Not, too up in the pre-market, not too down, only up, like I said, a little bit more than 0.5%. What do we got? Green or red, Diamond?
I'll go with red. Watch us reverse. Delete this whole thing.
Yeah.
Unlikely, but I could see it.
Snipe.
I'm gonna have to take green.
Hondo.
Well, it looks like this will finally be the day that I either catch up to Diamond or take the lead. I'm going to go green. S&P futures are up 28 points here. I like my odds.
And Mo.
Good odds indeed, but I'm going to have to take red with Diamond here. I think we sell off and wipe out this gain into today, that is. Yeah, red.
Gotcha. Alrighty. So I'm looking on the SPX daily as of right now. I saw that we do have an unfilled gap, I believe, down at 40.50. Yeah, an unfilled gap down at 40.50, or a little bit lower than that, like 40.30. Overhead 4,200, huge, massive resistance level. We haven't reclaimed and been over 4,200 since I believe like August of 2022, last year. Almost a year. We're closing in on a year without reclaiming 4,200. So with that being said, 4,100 as well. Massive psych level. What do you guys got? What's coming first, 41 or 42? I believe we're going to open up today right around 41.40. So we're close to the middle, favoring distance to 4,100. What do you got, Snipe?
I'm gonna have to go with 4,200 on the same thesis that we do. We have a green day today. I think we might end up touching 42 later today or tomorrow.
Yeah, I mean, it would be super aggressive today, but I wouldn't doubt it, right? Because we got that minutes release. I mean, this is just a toss up. What do we got, Diamond?
Well, I would have to go 4,100. I guess that would coincide with the red thesis, right? Is this an end of the week thing or is this a today thing?
No, just what comes first. I mean, it could be end of week. Who knows? We might chop around and trade within that $100 range.
Sure, I'll take 4,100.
Mo.
Yeah, 4,100.
What a beard. Put that thing back on.
Unbelievable,
dude.
This is good. Come on, man. 4,100. Move on. Let's go.
Let's go. Let's 4,100 and red. Let's dye that beard red. Come on, man. Hondo.
What do you think, brother?
42.
What do you fucking
42.
think, brother? 4,200. Send it to the goddamn moon.
Fuck them all.
Fuck them all. Squeeze them all. Also, something we haven't talked about, Rocket Scooter. We've been using the trade. Rocket Scooter rips. Market makers positionally bullish. They have been for like a month plus now. That DD number every day has been greater than a half. I mean, rip it. That's all I got to say.
Rip it. You heard it from the man himself. All right, that's going to do it for me and Bet the Bell. Hope you guys have a great rest of the day. We'll pass it back to Hondo here from Mo.
All right. Mo Mamba market analysis to close out the show. Mo, what do you got for us?
Go ahead here and share my screen. It's massive. They were just infamous trend line right here. shit. As always. I know. I'm mute. My bad. So SPY daily time frame, guys. So this HNS is still intact. And Honda's giving me shit about being mute. So trust me, I'm not trying to force a HNS. I can care less if there's a head and shoulders pattern or not. I'm playing what the chart is showing me right now. Remember the past week, since last week Monday, that is, we've been hitting on this 414, 413 area as resistance right now. We're finally gapping up into that zone. So this will be key to watch. If we're able to break through this resistance here and come up, then I'll expect us to test the highs, which is, the head that will then invalidate the HNS, right? But as of now, it's still intact. You can come up here, reject it, come down. We're still intact. That's the head. That's the left shoulder. Looking to form a right shoulder here. So it's big. I'm actually, I'm more than likely going to start my further out swing short position on SPY here. I'll make a decision towards the end of the day, but really I want us to come up here during market hours, test this area, reject, and then start to sell off. We'll love to see that. Then I'll grab my short to the downside, further out expiration in case we do end up coming back. Gives me time to add. Those cons don't get hit as hard, right? Taking those further out expiration. I'm looking at 2-3 months. I really want to hold this. If we do get a strong move down, I want to capitalize on most of the move if I can. But really, that's the main thing I'll be watching today is this 414, 413 area. See if we're able to test or reject and then come down. And if we do test and close that, I'm expecting us to come back down into this 408.3 and even test this demand zone, this daily demand zone once again. So that's my big watch for now. It's just coming up here and testing this 413, 414 area for the day. Thanks, guys.
All right. Thank you, Mo. Thanks, everybody, for tuning in to this morning's episode of Beat the Bell. It is a big day. CPI in the rear view. FOMC still to come at 2 p.m. Eastern time. Trade safe, trade smart, everybody. We'll be trading live all day in the Kane Capital Discord. You can go to kane-capital.com to trade with us. We got that 7-day free trial going as always. But that's going to do it. We'll catch you guys back here on Friday morning at 8:30 a.m. Eastern time. Have a great rest of your day, everybody.